Watch this morning. When it comes to tax audits, the IRS is not just looking for the high rollers. Sometimes your average taxpayer gets flagged for simple mistakes. Joining us this morning to try to help you not make those simple mistakes, Bert from the Certified Financial Group, the Oracle of Orlando. Welcome back, Joe. Good to see you.
Good to be here.
So we've got 5 things we want to talk about.
Right.
Let's start with listing all of your income. Why is this so important?
Well, because the IRS gets a record of everything you've earned. Not only your W-2, that's easy, that shows up. But oftentimes it's what's called the 1099s that trip you up. This is where you got a little bit of interest on your, maybe your checking account, savings account, and of course any dividends or capital gains that you got, any mutual funds, you get what's called a 1099. That 1099 copy that you got is also reported to the IRS. In that system, they know exactly what you received. So if you ignore those, lose them, and don't file them, that is an immediate red flag, because what the IRS says, you're sloppy. Not only are you sloppy here with stuff you got right in your hand, but you might be sloppy in other things.
So then you might expect a knock on your door.
Exactly.
Or at the very least a phone call.
Even if it's $1, put it on the form.
Okay. Don't mix business with pleasure. What do you mean by that?
This is hobby losses, and this is where people have a hobby, whether it's arts and crafts, whether it's painting, whether it's raising horses, whatever it might be. You think you can write this stuff off because you hope to generate some income from it. You definitely have to have a business intent. In fact, the rule is that you have to have a profit in 3 out of 5 years. Otherwise, they may come back and question the deductions that you're taking for this so-called hobby.
Hobby. Let's talk a little bit about this.
Sure. Think of any hobby that you might have.
Right.
And people are always looking for an excuse to be able to take a tax deduction.
And so they'll try to claim it as a business expense?
They'll try to claim it as a business expense. One of the more common ones is very expensive hobbies like raising horses.
Right.
And if you in fact have a business motive, and in fact you can demonstrate that you're set up to make a profit, then you have no problem. But unfortunately, many people use it as a hobby, have fun with the horse,
and then you're going to get that knock on the door.
And all the stuff that goes along with.
Wow.
Yeah.
Okay.
Yep.
Pay your nanny taxes.
This is one that a lot of people aren't aware of. You know, if you're paying the babysitter a lot of money every day comes into your house, the gardener, you pay him cash. Anybody else that you're paying, technically, theoretically, you have a liability to withhold and pay Medicare taxes. This is what's tripped up some congressmen running for office.
Wait a sec. Yeah. So what about, okay, because I can see all the parents out there right now dropping their breakfast dishes.
I'm saying...
Occasional babysitters, do you have to pay?
Technically, yes. In fact, you're supposed to issue a 1099 if you paid more than $600 to somebody over the course of the year.
All right.
I'm telling you what the law is. I'm just telling you what the rule is.
Finally, double check your math.
Oh, this is one that trips up a lot of people. You know, they're kind of sloppy, want to get a thing in the mail April 15th. They're running down to the post office, got to get it in by midnight, and they didn't do the math correctly. The IRS will at least write you a letter and make the correction for you.
At which point your heart will stop.
Exactly.
Bert, the Oracle of Orlando, thanks.
Good to see you.
Have a good Sunday. Hey.